What is up, Prop Shop? Austin Trades NQ, founder and owner of the Prop Shop YouTube, coming at you with our brand new long format trading masterclass series. Hoping to give you some technical insight into trading zones today with our episode number 1, Trading Zones Masterclass. Whether you're a new trader, whether you're a seasoned trader, this is kind of the bread and butter to my technical system because it's rooted in auction market theory, supply and demand, price action as a general whole. And so, looking at a candlestick chart, for me, this is the most organic and kind of just raw technical approach to understanding price action and edge as a momentum trader. I seek to keep it super simple. I have about 2 setups that I trade within the context of zones themselves, and I've broke those down to an extent on this channel. Second buyer setups, technical entries simplified, those have all been broken down in previous videos, but today I want to give you all a lot more insight into the how, the when, the where, and the why. Actually giving a higher level technical and kind of behind the candles, so to speak, look into why trading zones work, what is supply and demand in auction market theory, and what allows me to draw accurate zones and to trade them with confidence from level to level. Again, that's really the bread and butter of my technical system. And per usual, this is not financial advice. These long format educational videos are designed to try to break down in spoken word as much detail into my technical process as possible. And hopefully you can take away some really actionable insights for yourself and gain more confidence, more edge, more simplicity in your own trading process. So without any further ado, let's get into this video, episode number 1, Trading Zones Masterclass. Seeking to simplify your process, let's give some high-level intellectual understanding to auction market theory and supply and demand, first and foremost on higher time frames, before we break down how it's actionable on lower time frames for me as a momentum trader. Looking at the daily chart, I already have 3 zones here, and really the key for understanding auction market theory and supply and demand is understanding what the market is as a whole. The market is an auction, and the only reason, shout out Mark Douglas, one of the greatest psychology videos of all time on YouTube, How to Think Like a Professional Trader. You're going to hear some reiterated statements from there because it's simply true, right? The auction is simply the market moving higher and lower. It's really what it is. Why does it do that? Because there's more buyers than sellers, and there's more sellers than buyers. When we try to get into the situational aspect of it as a lower time frame momentum trader, I think that's when we start to add a lot of noise to our process, as opposed to my approach currently and for 5+ years now. I think the first 2 I struggled, just approaching price action as simply that. It's just price action. We're seeking to generate ideas that produce high probability and edge. And I don't really care why price goes where it goes, how price goes where it goes. I simply want to trade it accurately and consistently. Now, understanding these ideas, understanding this ideology comes from the fact that the market is an auction. And I can't tell you what any participant in the auction is going to do at any time. That's the intellectual bread and butter. As Mark Douglas so eloquently put in his videos, psychologically, we don't know what this buyer is doing and when they're doing it and why. However, we can identify areas where past buyers and past sellers are most likely going to make certain decisions based on auction market theory. And I'm going to get into the details of that right now. So if we look at 2025, we had an all-time high, and this would be distribution that I see very clearly. And the reason this is distribution is because this candle body to the candle wick had a very strong reaction and a trend reversal. So from a technical standpoint, we have a trend reversal, and the reaction was very, very strong. And we see how price tested this level again about a couple months later, and we saw a reaction to the downside out of it, which formed a new trend. In real time, shorts entered a position, and the offer got hit again. This would be second stage redistribution from a Wyckoff distribution and accumulation standpoint. And on lower time frames, we're going to break down how this would technically just be a second seller. But from an auction market theory standpoint, we want to understand what's happening here at these zones and why they're important. This really strong reaction on the daily chart, let's zoom in a little bit here for some of you. This really strong reaction on the daily chart tells me, not from a technical standpoint, but from a behind the candles perspective, that anybody that was getting short at 290, 300, 400 on Tuesday, December 17th, 2024, got filled and rewarded for their position, which means the psychology of the markets are very simple. This is now discount, or this is fair value. This is where you want to be a seller, right? Because this is going to be an area where if we can sell the market here, our risk is so much less than our reward. And we see that these former sellers hit the market hard. And if you didn't get your order filled, that order is still going to be sitting here as a resting limit order on higher time frames. So this is now a supply zone, candle body to candle wick, strong reaction, top of a trend or bottom of a trend, and we see a really strong reaction out of it. Getting into recent price action, I want to highlight some macro zones for you and kind of understand auction market theory a little bit deeper. If the market is simply an auction, there's going to be technical patterns that take place around key levels that are very actionable and tradable from a candlesticks perspective, a price action perspective, a patterns perspective. You might call it a bull flag, you might call it a double bottom, you might call it a fair value gap, but we're going to get into why we're all using different names to identify the exact same things. The market recently, up into Wednesday, August 13th of 2025, and into Friday, September 12th of 2025, created a very similar situation to what we just talked about recently. We had a former high, which was a strong reaction and reversal, into a new high. And once we made this new high, even though the reaction wasn't super strong initially, we did see another break of structure, a move lower, and anybody who would have been getting short at prior all-time highs, right? We did see a reaction out of this. We saw price trade at 24,000 and price traded down in a matter of 2 to 3 days after the fact, about 1,000 points lower. In the context of the local trend at the time, this was a pretty effective and actionable short side move. So this is now supply, candle wick to candle body, because from a market auction theory perspective, shorts filled positions here, buyers ran out of momentum, and we saw a new trend form, at least from a macro perspective. And so anybody that was waiting to get filled on their short positions or that did get filled on their short positions either entered here, still has orders here, and most likely has their stops somewhere above this pivot into this general range, which we saw get tested later on. And as markets came into new all-time highs, and they did the exact same thing we just articulated, which is a test of highs, consolidation, really strong reaction. We tested it again. We finally got above it. We test these highs. We get a really strong reaction, and we test them again. Second stage redistribution, Wyckoff methodology. We see a second seller here, and the markets move lower aggressively again. And we continue to see this play out until consolidation takes place, and the market's now deciding whether it's going to trend higher, trend lower, or consolidate for a little while in the meantime until it determines what's next. This is a technical perspective on auction market theory with a little bit of nuanced approach to where buyers, sellers, and orders would be at based on the candlestick chart itself. This works because unlike moving averages and stochastics and RSI, the things that actually move the market itself are quite literally order flow, price itself, right, and volume. And so we're trying to determine based on these candlesticks exactly where the order flow and the volume's at based on the highest probability zones of where buyers and sellers would be, and using the higher time frames to just give some really basic insight into what zones are, why they work, and how we can begin drawing them consistently to be successful. Hopefully by now you understand the market's an auction, and like in any auction, there's going to be levels where there's fair value, and there's going to be levels where you wouldn't buy it, right? If someone's trying to sell you a car for $10,000 more than it costs off the lot, you're not going to do that. And in a lot of ways, the market moves the same way. At least I hope you wouldn't. If we can go into a shoe store and buy a brand new pair of shoes for $50 off what they are online, that's actually a discount, and a lot of you would most likely buy it. That's the exact same reason that traders are so willing to lean into a psychological tendency called the disposition effect, and they seek to add to their losers because they're buying something at a perceived discount versus adding to winners, which is technically putting a premium on something that you already appear to be cheap or cost effective relative to your current positioning in the marketplace. So right now, what I'm seeking to do with higher time frame zones is determine where would buyers seek to buy price aggressively, where would sellers seek to potentially sell price aggressively. And the really cool part about this is once we recognize that it's an auction and we recognize there are zones that are technically premium and discount and whatever terminology you want to use to determine what I call high probability trading zones, We also create two different trading setups out of these. We're going to break this down in the 15-minute time frame. I'm going to use today's price action, Friday, January 2nd, 2026, the first full trading day of 2026, to give you multiple different actionable opportunities to integrate this into your trading process. But before we do that, we're going to continue hammering home these intellectual ideas and kind of getting a macro view, top down, into what auction market theory and supply and demand zones can do for your trading. Most of the market is noise. It's entropy. The market's moving from zone to zone, level to level, and the auction is seeking premium and discount, and it's going to do so regardless of how it gets there. So when we draw these trading zones, we discover that, hey, the market's going to move level to level. What we can then do is build a time frame for execution that allows us to be consistent, confident, and enter the market with clear expectations. And this is what I mean by that. On a daily chart, I'm looking for a rolling 1 to 3 month structure that fits the macro narrative, that allows me to trade confidently on lower time frames around what might be a tail statistically. We're getting into some pretty in-depth technical concepts here, but my technical system provides 1 to 2 really high quality trading setups per day. And that doesn't mean it'll do it every day. It means that my system, on average, whether that's 4 times in an individual day or it doesn't do it at all, 2 to 3 days in a row, will average out to provide a 5-minute, 15-minute model that's actionable 1 to 2 times a day. So my expectations are clearly aligned before entering the market. And I know that because the daily time frame, the hourly, the 15-minute, will also provide me 1, maybe 2 tail opportunities every week or two. Meaning, we're going to draw zones on a rolling 3-month, 1-month period. And then we're going to consolidate those zones down to a rolling 5 to 10 day period on a 15-minute time frame. And we're going to highlight how could you take advantage of this technical concept, and hopefully highlight how the intellect and the understanding of the behind the candles order flow allows you to have confidence and more accuracy in actually drawing and executing these zones. So on a rolling 1 to 3 month period, today, January 2026, we're going to go all the way back to August of 2025. And technically speaking, this did trade into September, and we did see a reaction out of this in November. So this is about a rolling 1 to 2.5, 3 month period. We have this resistance, which was prior all-time highs. We saw a nice bounce out of this, right? A nice breakout here, excuse me. And then we saw this price bounce off of this 24,000 level later on in the year, right? We had a candle body to candle wick. This is a seller's ask. They sold the market lower. We got back above it. This is a break and retest of structure. And now this prior resistance becomes support because prior sellers become current buyers. Anyone that was short here, you don't know their trading time frame or their narrative, right? Maybe they were short on a monthly chart. Well, they were underwater for a long time, and now they have an opportunity to sell their position and break even. And so ask yourself, when's the last time you entered on a 1 minute, 2 minute, or 5 minute chart and you held for too long and you weren't supposed to be in the trade? The second that price gets back to break even, 90% of you listening are going to sell that trade for break even. Some crazy folks in here probably won't do so. But the point stands. The psychological concepts have confluence with auction market theory, and then we actually see it take place as an actionable pattern on the candlestick chart. So on a rolling 3-month period, I notice we have resistance turn support, and if we get below this, I would set alerts and I would look for price to trade lower into a higher time frame macro narrative, which would be a statistical tail to the downside. What I'm looking for now is this rolling 1 month structure, which would be our local swing high and our local swing low. So this technical resistance is now going to get dragged down to this candle wick. This is our swing low. And we're going to leave this right where it's at because you can notice how this candle body, this candle wick here, are going to continue acting as clear and obvious structure for price to come back to eventually. Now for me, this high candle bodied candle wick, this was all-time highs. Notice this reaction, right? This daily candle reaction, pretty aggressive selling. We re-offered price here, the market participants re-offered price here. Then we see price go lower again a second time. This is key to me because we do see equal highs, 1, 2, 3, 4, 5, 6, 7, 8 now. Tests of this 26,000 level and this zone, which acted as micro demand. You can kind of see this on the daily chart right? Price did close it back above this the prior session. It closed above it again, and then we got another flush to the downside with 1, 2, 3, 4, 5, 6, 7, 8, 9 tests of structure. So we kind of have layered distribution here. And these are going to start being auction market theory concepts you hear me use in the masterclass videos pretty consistently. We have accumulation, we have distribution, and these are going to be the key forces that move the market. We're either buying it to go higher, we're selling it to go lower, or the consolidation that's taking place is typically either neither market participant finding value or one market participant, usually higher time frame players, distributing price over the course of days, hours, weeks, months, etc., and building a bigger picture position for a bigger picture move. So now, hopefully we understand auction market theory a little bit. We understand how to draw these zones. We've already identified a video in the Prop Shop YouTube, generating repeatable edge with zones. So we should have a little bit of an understanding of this as we continue to get more in depth. Breaking this down into what I find actionable, right? We have the NASDAQ daily. We have a zone here, a zone here, and a zone here. Typically, I'd set alerts. We're not going to do that in this video right now. But when I'm looking at price test these levels on the daily, I then want to go down to my lower time frame charts and see, is there any confluence between this daily narrative and potential execution, potential actionable ideas on my 15-minute time frame. And so for me, knowing that the market's in auction, knowing that this daily chart, which is what I have up right here, right now, is going to provide me some macro narratives, I want to see if those, again, have confluence with these setups, right, on the 15-minute time frame. And so auction market theory takes place yet again. Why am I charting levels for my process? Doesn't matter what you think, and I don't mean that rudely. Someone in the comments is going to say, hey, why don't you chart levels with the extended hours on? Because I trade in regular trading hours. The most volume takes place during the New York Open, the New York opening range, and the close of regular trading hours. So for me, I keep my process simple. I don't overthink it. I trade based off regular trading hours because that's when I personally trade, not that complicated. Looking at the 15-minute time frame, we have a pretty clear and obvious structure that we can trade out of here, and I want to highlight how all of these same concepts apply, right? On the NASDAQ daily, supply was 25,875. 25,875, right? So we go to this 15-minute time frame. We understand where was supply? 25,875 up here. This was the gap that was created from the move higher. And so what did we do last week? We had candle wick to candle body. We had a strong reaction out of it, and this was the weekly high from prior week, right? This is a key swing high. So same as the daily chart, we're going to try to identify key levels and zones that act as high probability trading entries. We either want to be a buyer, we want to be a seller, or we want to wait for price to break above and retest those levels to then flip the switch and trade the retest, etc., etc. So right now, again, prior week's highs, prior week candle wick to body. We rejected this in the prior week again. And kind of a similar idea here. I did kind of skew this zone because to me, this is candle wick to candle body. We had a quick sweep of liquidity. And as you can tell on the 15-minute time frame, I'm going to blow this up for you guys a little bit. We held structure here, and this acted as demand in the prior week. So going into today's trading day, this again, Friday, January 2nd, it was very obvious what the higher time frame narrative was. As long as price on the daily stays below 875, 850, I think we can continue looking for shorts. And as long as that lines up with the 15-minute narrative, then I'm not going to fade momentum. But if we break structure to the downside, I think there's some pretty actionable trading opportunities based on this daily narrative and these 15-minute levels. And really what I'm looking at more than anything is these 15-minute levels, right? So 15-minute wick to body, that means there are sellers here with stops above. 15-minute body to wick, there are buyers here with stops below. And we saw that take place Wednesday of this week, actually the day right before the new year. We retested this candle wick right here. Slight retracement, measured move lower. Today, January 2nd, we saw a gap up to start the new year. Price was distributed at this prior supply. Notice if you were trying to get long into the lower time frames, you probably got stopped out because this higher time frame narrative is where price is moving, zone to zone, zone to zone. And we're going to cover that right now. So headed into today, Friday, January 2nd, I had 3 zones that I'm really looking at from an auction market theory perspective. And just like the logic we use on the daily chart, I'm looking at this from a rolling 5 to 10 day period. Because on the higher time frames, the daily candles are going to provide insight into what might happen the next day, week, and further on, and so on and so forth. But a 5-minute candle is only going to tell me what's going to happen in the next 5 to 15 minutes. These 15-minute candles can tell me what might happen in the next 15 to 30 minutes. So on these 15-minute candles, if I can capture 1 to 2 bars, I'm going to get 20 to 100 points on the NASDAQ on a consistent basis. So in order to trade my simple, repeatable, scalable setups, I consolidate auction market theory down to a 15-minute time frame. And that provides me with regular trading hours only, zones that are actionable on a 5-minute and on a 1-minute that are going to allow me to execute the same principles, the same concepts, but just with more opportunity offered on a consistent basis, right? If I'm trading 1 to 2 15-minute bars, I'm going to get, again, 20 to 100 plus points on the NASDAQ trading momentum setups. So letting these zones kind of take place here, letting them expand. We had a prior session's low, right? Prior day's low. This is my 15-minute zone. This would be the gap fill. We had this demand and we had this supply. You're going to notice there's one blue line on my screen, and that's an alert. Normally I set alerts at the start and end of a zone, start and end of a zone, and so on and so forth. So today we actually tested zone 1, zone 2, and zone 3 all within an individual trading session. No indicators necessary. Understanding that the confidence comes from auction market theory and supply and demand. Price is moving as an auction. If we can identify where premium and discount are, we can identify fair value, whatever terminology you seek to use, then we can be a seller in supply, or we can wait for supply to be broken and we can be a buyer above it. We can be a buyer in demand, or we can wait for demand to be broken and we can be a seller below it. We can be a second seller in supply. We can be a second buyer in demand. We can trade a sweep of liquidity. We could wait for a break and retest. These are all actionable price action ideas, and they, again, come from the actual auction itself. Price is moving based on time, horizontal volume, meaning if buyers think that 650 should be defended on the 15-minute, then in the next 1 to 2 bars, we're going to see a move with subsequent volume to back it that backs that thesis, right? Without too much complexity, if we get below zone A, then I'll look to be short. If we get above zone B, I'll look to be long, and so on and so forth. These are the simple things that if you have a deep and more masterful understanding of the how, the why, and the where, then you won't be so nervous when it's time to commit to the win. You won't hesitate to stop out of trades and to confidently let your winners run and to actually observe how many opportunities there are on a consistent basis to trade off of trading zones. So now that we've established a little bit of a foundation rooted in auction market theory, rooted in supply and demand, and hopefully giving you some psychological insight into why this is so important, I hope that between video 1, you're able to understand how to draw the zones, you're able to understand a little deeper context, like I said, in auction market theory, and now we're going to get into the real nitty gritty, so to speak, the real details of these entries and where these alerts would be set, and how today, Friday, January 2nd, 2026, we executed these beautifully for some really high quality setups and how many opportunities there actually were to trade. I'm going to bring this arrow chart up for you guys really quick. I just kind of want to point out what I'm seeing on the charts and maybe exactly where you could have taken some entries to be successful today. So on the 5-minute time frame, recognize I had alerts at the top and bottom of every zone. These zones were drawn before the market even opened, and all I have to do is wait for these alerts to go off. If you struggle with trade management, if you struggle with psychology, if you struggle with jumping from system to system, are you disciplined enough as a man, as a woman, as a human being in a modern technical environment to not just have attention deficit, to not chase the next best thing, and to set alerts and to wait for those? Because that's what I did today. I traded this live as talked about on the YouTube channel. There's a video of me taking a trade before I even took an entry. We're going to cover exactly how many opportunities there were today and how this plays itself out, like I said, 1 to 2 times a day on a consistent basis on average. So Short side narrative on the daily, we were waiting for price to break below a level or above a level, and this would really give us a higher time frame 15-minute candle to trade into. If we do that, we can trade 1 to 2 15-minute candles and hopefully get a full move out of it. And again, every 15-minute candle today had an average range at the time. They're moving quite a bit, 60 to 100 points. So like I said, 20 to 100 points for any momentum trade with this higher time frame thesis drawn from these 15-minute zones. So price did exactly that. We tested this higher time frame zone today. We rejected it really hard. I hesitated on some shorts here. I got to be honest. It's the first trading day of the new year. 5-minute candle rejected, 1, 2, 3 bar. We do see a close below this candle high. We see a close below this prior candle high. We see a close below these bodies for the most part. This would be indicative of sellers. This is distribution into an upper zone. If you're on lower time frames, you could probably find a lower high here, but again, keeping things simple, looking for 1 to 2 5-minute setups that play out on these 15-minute zones and thesis day over day. So from a price action perspective, we have the first 15-minute range that formed. I'm never really ever trading inside of that unless we did technically break a level or zone really aggressively. We test the upper range, and right now I'm thinking to myself, I could trade, I could get short, but if I'm getting short at 740, I'm going to be short at 740 with 90 points of risk. And technically speaking, if I were to target low of day, I would have got 100 points out of it. But this is an ambitious move in the middle of range to start the session. And of course, price moved lower. And now where so many traders looking for continuation moves get FOMO, I have multiple different setups. If price tests my zone on a back test, I'm looking to get short. And if it fails to do so, it'll probably move to the next zone where I'll look to observe longs or wait for another break and retest to get short. Again, price trends from level to level, zone to zone, and it goes from move to move. The goal is to wait for those alerts to go off. So today, alert number 1 goes off about 20 minutes into the day. We get a lower high here. I wanted to be short, failed to do so because of this risk reward. Didn't find it to be super actionable at the time. At the very least, I would have felt more pain losing than I would have felt missing out. We see a big break to the downside. 5-minute bar closes above 480s, and this is where I want to get into the details of trading actionable entries within the context of these zones. This 5-minute bar, we're going to blow this up for you really quick so you can see it much clearer on levels and zones. This was the prior day's low, right? This was the prior day's low on the 15-minute time frame. Blowing this up for you guys. This is where I began to take a really granular look at price and how you can use zones to your advantage. I'm not hesitating. I'm not freaking out. I'm not getting FOMO. I'm waiting for my alerts to go off. I'm waiting for price to test those pivots. And so it did. We got a test of this zone, this prior day's low. Of course, it's not going to be perfect. We have to understand we're playing a probabilities game. We are playing a game of approximations. And I was seeking to hopefully approximate correctly in regards to where I could be long if we saw an appropriate reaction. And this is the auction market theory taking place in real time. I'm waiting for a 5-minute signal. We already got one today. So technically speaking, if you wanted to be short, it was very possible you could have been short into this signal today. And this would have been trade number 1 that would have provided you 1-to-1 R. Again, I personally just wasn't comfortable trading it. I didn't want to be short there with that much risk to reward relative to where I was trading price at the time. So short opportunity number 1, long opportunity number 1. This is what I was seeing from price today. I was seeing an opportunity to be long into this 5-minute candle, and I wanted to trade into this. So looking at auction market theory, where was our rolling local low? Prior to that 5-minute bar forming, our rolling local low was going to be on this 5-minute candle, 479. And so anybody that went short the market below 479 at this point, once this 5-minute bar closed, was technically underwater, right? Yes, this is on a lower time frame, but we have a demand zone to support it, right? We talked about this already, auction market theory. This zone, if price tests it, could be a potential high value, high probability area to be long. And if price gets back below this zone and we break down and retest it, then I'd look to get short. Very simple. We did get a 5-minute close above the local low and around the zone. So we have 2 confluences here. Pattern of buyers above structure and at demand. And so what I went to go do on the lower time frames, I did film this video live. We'll break this down quickly. I'm on the 1 minute. I'm looking for a potential entry opportunity. And right as price started to push higher, I took an entry here into this level. Again, this video was filmed live before I even took an entry and scaled out at 1R. and ultimately got a really nice 50 plus point move on NQ. Without getting too much into the technicals of the 1 minute time frame, we're going to go back to the 5 minute. We're going to recognize where there's more opportunity to trade and where we can potentially still identify high quality trading setups. This would have been a great short opportunity. This would have been a great long opportunity. Nice strong close above structure, above lows, at demand. Not looking to trade into a downtrend too much, right? We already caught a bid. We already saw a move to the upside. Markets are trending down. This is the retracement bounce, big flush. Weak candles to the downside, big flush below the prior day's low. That's the technical trend at the time. And so for me personally, looking at the NASDAQ, we're going to get into a little bit more. This is the time I'm looking to trade. 9 a.m., 9:30 a.m. Pacific Standard Time. For me, on the West Coast, that's the highest quality trading opportunities day in and day out. And like I've already talked about, 1 to 2 really A-plus opportunities based on auction market theory, trading strictly what we call naked price action in the industry, and using auction market theory, supply and demand zones to just set alerts, right? You can set alerts, wait for those alerts to go off, and now you're actually in a much more healthy reactive state of waiting. We're not reacting to every tick in price. We're not reacting to every test of moving averages. We're not reacting to every fair value gap we see. We're simply waiting for price to get into high value areas and waiting for observation, waiting for reactions, waiting for price delivery, and observing whether buyers and sellers are going to provide us opportunities to trade with trend, against trend, and place risk based on these really well-defined, well-respected areas of supply and demand. The market itself is an auction, and so the more we interact with the auction based on the actual principles of the auction itself, we're going to have a higher probability of success. And without keeping things too complicated, it's as simple as sellers, buyers, and then quantifying these setups down to actionable entry models around these zones. For me, a couple of things I want to highlight for you guys. Second buyer, second seller, continuation breaks and retests. We've talked about those already, but just looking at price action from a just kind of a raw price action perspective, I'm going to highlight one more setup that is outside of my opportunity, my window of opportunity, that is using an auction market theory perspective, an auction market theory idea that you could integrate into your trading. At the very least, I hope it gives you a lot more insight into what the markets are doing behind the candles, as we've already talked about in this trading masterclass today. So if you're still with me, looking at the 5 minute time frame, we're going to blow this up one more time on NQ. This is a really good example of traders not understanding the auction and simply trading patterns. Although that can work, we want to trade patterns with context that's being supported by the auction. That's when the magic really starts to happen. So as price tested this low today at 8:10 a.m., which would be 11:10 a.m. Eastern time, we saw a double bottom and then a triple bottom and then a break lower. I think most traders would be looking for a retest to get short into here. And although at the time, it's obviously much easier to tell in the hindsight that that didn't work out, that's probably a pretty actionable idea. If we go candle wick to candle body, which we keep updating the zone throughout the session, you'll notice we never really closed below this level and saw follow through, right? Actually, we closed above it, we closed above it, we closed above it. And so now most traders would be looking at this pivot as low of day, and they're correct completely. But where is the actionable entry going to be? It's not going to be this candle wick to this candle body. This is going to be buyers, 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 sellers. And this now acts as a sweep of liquidity. And I'm going to highlight a really actionable second buyer model that took place in real time today. I did not trade it. I did have someone over at my place today in my office, and we were watching this in real time. We kind of laughed at ourselves for not trading it. But regardless, this is a really high quality entry opportunity that is going to give you a little bit more concrete understanding of auction market theory. So going down to the 1 minute time frame, we've already distinguished what happened on the 5 minute. We closed below, and for 2 5 minute candles in a row, right, we were closing back above this structure. So let's go back to the 5 minute one more time. Right, this candle closed at 10:50 a.m. This closed at 10:55. This closed at 11, and the next candle closed all the way up here at 3:23 at 11:05 a.m. This 15 minute bar swept this 290-300 area, and this closed at 11 a.m. So we're going to highlight again on the 1 minute time frame where this zone kind of provides a really clear and obvious opportunity to enter the trade. What was acting as demand throughout the session intraday on Tuesday, January 2nd, 2026? Pretty obvious to me. Demand, 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 demand. We've covered that on the 5-minute, 15-minute already. When did that 15-minute candle close above this? 11. And we had 2 5-minute bars that closed in this same area with some strength as well, right? So if we believe that this zone is acting as a higher time frame sweep of liquidity, then this consolidation below here was simply just accumulation. So if you're trading an EMA retest into this pivot, then without the appropriate context, it's not that that's a bad trade idea. It's that how much leverage you take, whether you fail to stop out of that trade, whether you manage that trade appropriately or not, that can be, should be, and in a perfect scenario, probably technically speaking, is supported by context. And that context comes from understanding the principles of the auction. Are we trending or are we balanced? Are we trending with volume and momentum, or are we simply testing support and slowly grinding higher over a long extended period of time? We don't need more demand for the market to move higher, we just need less supply. And these ideas will start to make more sense the more you view the market as an auction and from the lens of the auction. So looking at the 15-minute, we did get a close above this at 11 a.m. Notice that again, this 1-minute bar closed at 11:03. Higher time frame signal, 5-minute candles closing above. And if I wanted to be a second buyer here, instead of looking to get short into strong 5-minute candles, I could recognize a really clean technical opportunity to take this 1-minute bar off of 300 long, and I could simply place my risk ATR, probably realistically would probably place about a 50, maybe I would have placed a 40-point stop here. I would have targeted structure in a perfect scenario, 64 points, 2/3. We talked about this in real time, so a really easy trade for me to review right here, right now. Again, looking at auction market theory, looking at the market as a lens of buyers versus sellers. You're probably going to start to see how all of these zones, except for this bottom zone, which we identified much later on in the session, were drawn before the day even started. You had a short opportunity early. If you didn't like the risk to reward, you had another long opportunity later on. After the fact, we're kind of starting to push into this 8:30, 9 a.m. stage where I'm not super interested in trading the market because this is going to be the highest volatility, momentum, and range more times than not. But if you want to get a more concrete understanding of auction market theory, you can begin to understand these ideas and how trading zones are effectively, simply, high probability trading entry locations. They're going to give you a calm nervous system if you set alerts. They're going to provide you with an opportunity to simply wait for things to happen. And if you do so, as you can tell today, I really believe more than anything, especially if you look at ES, there is an opportunity to be short, long, short. And realistically, if you were looking at ES today, definitely a couple longs throughout the rest of the session. And easy and actionable opportunities per usual. Our ES retest of the opening range here, providing a really quality short off 600 on the NASDAQ. I believe there was 1, 2, 3 really A-plus opportunities to trade using zones, simply trading off of the ideas that I've talked about in this channel, and hoping to give you about a 40-minute video into some insight and actionable ideas into trading. I say that 3 times because that's what it's all about, right? The knowledge base that we're building allows us to have a much deeper understanding of the things that we're doing. But then we want to simplify that down into simple, repeatable, and scalable entry models. We want to be, personally at least, second sellers, second buyers, or break and retest trend traders into these zones. And when price starts to see overextension, we can look for second buyer models, second seller models to trade those retracement bounces and trade the market up and down regardless of the overall context and conditions, just using those contexts and conditions to trade much more confidently, much more consistently, and actually trade the market itself, which is an auction based on supply, based on demand, based on order flow, and picking high quality horizontal directional bets with hopefully a little bit less risk than the potential reward, right? If you listened to episode 8 and you're still here today of our trade review session, we entered this trade 5 micros, took a move higher, and then I scaled 2/3 and left 1/3 in the market. And I talked about it. I was in an asymmetrical trade at that point. I was up about 40 to 50 points. I was in a trade with stops at break even. I had already hit the pay line and scaled out. And that's the goal every day. Wait for my zones to get interacted with, execute the 1 to 2 on average really high quality setups that will be provided to me as a learned expectancy, both consciously and subconsciously. And now trading is really fun. Now I have the ability to wake up every day, be proud of myself for drawing high probability trading zones, be proud of myself for putting in the work to build a system that's efficient and consistent, and ultimately just setting those alerts and letting those alerts go off. Not every day is easy. Heck, most aren't. That's what trading is, but every single trading day for a long time recently has been really enjoyable. Take ownership of your process. Hopefully this allows you to get some more insight, both intellectually and technically, into trading zones, and breaking all this down into the how, the why, the where, and the when. You can ultimately understand auction market theory, draw successful high probability zones, and take entries after your alerts go off with consistent success and a calm nervous system. I hope this masterclass has been helpful. I hope the long format continues to get better, because episode 2 is going to be a risk management masterclass that I've been working on for a couple weeks now. And I truly believe that will be the most high quality and useful piece of education that you will get in this trading space, but definitely on this trading channel. If there's anything I could do at the end of this video other than asking you to like, subscribe, comment below, it would be to check out the risk management masterclass coming out soon, part 2 of our masterclass series. Hard stops, mental stops, volatility stops, being a professional risk manager, psychology, and building a consistently successful trading business, becoming a professional risk manager. We're going to cover it all in these masterclass series. We're grateful for everybody that listens to the Prop Shop. We're grateful for all of our subscribers. 2026 is going to be an amazing year. Thank you so much for tuning in. If you haven't already, like, subscribe, comment, and as always, trade safe, trade well. Peace.